Should I refinance my mortgage now or wait for lower interest rates? This is a question on a lot of people's minds, and so I'm here to clear that up. If you don't know who I am, my name is Rick Elmendorf. I'm a mortgage loan officer with over 30 years of experience, and I've kind of done a few refinances, so it really kind of boils down to a few simple factors, and let's go ahead and get into it. So the question of should I refinance my mortgage or hold out a little bit longer to see if rates drop? And I get this question all the time, and the truth is, most people get it wrong. So today I'm breaking it down, when it makes sense to refinance, when you should wait, and how to avoid the number one mistake homeowners make when rates start dropping. So let's get into it. First and foremost, let's understand the real reason to refinance. Refinancing isn't just about choosing a lower rate or just dropping your interest rate. It's about making the smartest financial move for your situation. Here's where refinancing may make sense. First and foremost, of course, you want to lower your monthly mortgage payment. Even a 0.5% drop in rates could mean several thousands in interest savings per year. Maybe you want to shorten your loan term, switching from a 15-year to a 20-year or to a 15-year. These lower terms actually have lower interest rates. So don't just look at the 30-year rate, look at what it may be for that shorter term. Shorter terms as well save you more in interest because you're paying the loan off a little bit faster. But the key takeaway is this: it's not just about rates, it's about making a move that improves your overall financial picture. And before we move on, if you're not sure whether or not refinancing makes sense for you, I would love to run the numbers together. You can just check out my website. You can go to loanwithrick.com, and there's a lot of information out there. There's a lot of videos, good, helpful stuff there. And of course, you can always just email me and schedule a time to talk. I'd love to do it. Secondly, I want to talk about the biggest mistake homeowners make. And here's the mistake: you wait too long. You just twiddle your thumbs, hoping that rates are going to drop. This mortgage market that I've seen just over the last year has been one of the most volatile that I've ever seen in 30 years of doing mortgages. When rates drop, everybody rushes to refinance and lenders get overwhelmed, and you just don't want to put yourself in that position. And here's a pro tip that I see. I wrote an article about this recently, and you can go ahead and click the link in the description. I should have a link to it as well, is how to manage when it's time to refinance. I think there needs to be some planning ahead of time. Like, for example, it doesn't mean that rates are where you need to be now, but when they do hit there in the future, you want to be ready. So kind of getting everything ready is super important. For example, I'm recording this video in February of 2025, and people that have gotten a VA mortgage rate of 5.25%, well, that's lower than today's market. But that's not to say that they don't want to be prepared when rates hit 4.75, let's just say. So what we do is we program it in. There's a neat rate alert that we do, and every single lender has this. It's called Optimal Blue, and I'd be happy to do that for you as well. Basically, what an alert does is that it just never sleeps. It knows exactly where you need to be. So at the exact time that rates hit that, it's going to send you and your loan officer an email saying it is time to refinance. Pretty cool. Now I want to talk about a third topic here, which is, should you even wait for lower interest rates? I mean, I get it. Nobody wants to refinance today and then watch rates drop the week after they close. I mean, but here's the reality. Mortgage rates follow inflation. And if inflation keeps cooling, rates could drop more. I've been telling clients this a lot. It's okay to cash in your chips if you're saving money today, even though you think you may be seeing further interest rates decline down the road. That's okay. If rates are dropping, you don't want to pay a lot in closing costs. What you want to do is take maybe an interest rate that may not be the lowest interest rate on the board offered by your lender, but it's a rate that makes sense and you still meet all the criteria for refinancing. You have a good break-even point. You've saved a lot of money, but there's not a whole lot of costs, meaning that your break-even period is very short. Now, to go into that a little bit, when we talk about break-even point, it's simply this: the cost to refinance divided by your monthly savings. That's a break even. And I just categorize that in months. If it costs you $3,000 to refinance and you're saving $100 per month, that's 30 months to break even. Well, that's way too long in my books. I like to have your break even point a lot shorter than that, especially if you think your rates are going down and you want to refinance in the future. I like that break even point at or under 10 months. But here's the other thing. What if you're wrong? What if rates don't go down and you're in a position now to refinance and then they never do go down? Well, you just missed your opportunity altogether. Right now, I'm sitting in 2025 when everybody's wondering, what's the Fed going to do? and what actions are they going to take that would influence mortgage rates. And we all know that when the Federal Reserve cuts rates, they're not actually cutting interest rates or mortgage rates. They're cutting what's called the federal funds discount rate, which is the overnight lending rate to banks. But this is directly proportionate to what happens to consumer lending rates. So it does go in and it affects everything. And it's the Fed's key way where they kind of move the needle a little bit and speed up or try to slow down the economy. But one of the reasons I really hate waiting is just for that reason. You really just don't know. If it works for you now, and if you can make an educated guess or decision on saving $300 a month is $300 a month. And if you can do it again, great. If you can't do it again, you save $300 a month. So there's really no reason not to go forward with a refinance when it does meet your needs and fits all the criteria. Specifically with VA loans, if you're trying to refinance or do what's called a VA streamline refinance, you'll want to check that you may meet the 3 criteria for doing a streamline. There's a link in the description here. I do have a video on that, which are the 3 things you need to meet in order to be able to streamline a VA loan. So go ahead and watch that when you get a chance. So I wanted to leave you with this. Right now, you as a viewer watching this video have a decision to make. If in fact you are at a higher rate than where the market is, you have to make that decision. Do I refinance now or wait? Well, it just boils down to the numbers. And I like to put together, I have a nice little spreadsheet, but you want to see what's called a loan summary or a loan estimate. Those 2 things will show you exactly what your new rate would be, the payments would be, and the total cost of refinancing. One caveat here, when you look at the total cost of refinancing, you have to take out what's called prepaids and escrows. These are not closing costs. That is your money that go to pay the interest on the loan, which you owe anyway, and setting up your escrow account. And sometime your escrow account may be messed up. Maybe it's a little bit short and your lender has to redo everything. Some lenders just charge you a whole new escrow account, so they inflate your loan amount, and then you end up getting the balance of whatever is in your escrow account back, 1 to 2 weeks later. So that number, those, and they're big numbers sometimes, these prepaids and escrows, they're not part of your closing costs. So you don't calculate that into your break-even scenario. Essentially, it's down to 2 buckets. If you're looking at a loan estimate or a loan summary, it's your loan costs, title fees, and it's your recording fees. Those are really the only things. And if you're a VA loan, whether or not you have a VA funding fee or not. And if you have a disability rating, there is no funding fee. But I would offer you a free personalized breakdown of this and whether or not refinancing makes sense. And if you want to take a look at that, again, check out the video I did on refinancing and should you refinance and how we kind of map that out. We have a really cool system where you can just kind of plug in a rate, but you got to know where you are. And that's where this worksheet that I have comes in. That's where the numbers come in. Again, even if you're sitting at 5.5% or 5% and you want to know, hey, when is the point where I should be refinancing? That's what you need to find out. So I hope this video was helpful and it gave you a little bit of sense of understanding as to when to refinance, when to wait, when not to wait. I hate waiting. And if you have any questions, again, feel free to send me an email. You can call me as well. This is Rick, and I'll see you in the next video.